Cancel Elon. What's going on with this cancel Elon culture? Tesla stock has declined more than 50% in the last 3 months. Are we still bullish on the EV/AI company? Or is this the end of once richest man in the world, Elon Musk? In this episode of the USA Update, I'll dive deep into the key stats of this company, but more importantly, I'll analyze the fundamental driver behind this company. We will not only break down the controversy that Elon Musk is facing, but further break down how you and I can capitalize on this opportunity. I'm your host, Cody Yeh. For complete transparency, I am buying Tesla stock, but here's my take on this company. Tesla is losing its competitive advantage to other EV companies all over the world, especially in China, which I will go into details later in this video. Ready for the USA Update? Give me a like and subscribe, and let's get started. So why is Elon Musk facing the boycott? I will summarize it in 3 sentences. Tesla is becoming a political symbol of Trump and Doge. Trump claimed in the post that radical left lunatics were attempt to illegally or conclusively boycott Tesla. In my opinion, Elon's shift to the right-wing politics does not sit well with Tesla buyers. Now let's take a look at how Tesla stock was performing before and after the US president election in 2024. So right before the US president election, Elon Musk pumped in $270 million campaign money for Donald Trump to take the lead. Right before the election, the Tesla stock was sitting at $250. Right after Donald Trump was elected, the price jumped significantly to as high as $480 within 1 month, right? But soon after, it started plummeting all the way down to about $241 as of the moment of filming this video. According to Reuters, JP Morgan's cut its price target on Tesla's stock as the brokers expect the second straight year of lower delivery, and I'll touch on why that's so important later in the video. With Analyst also pointing to a change in sentiment towards the EV maker for existing customers and potential new buyers. And JP Morgan also cut its price target to $120 to $135. Meanwhile, across the board of the Analyst price target is about $370, so you have seen a big gap. Now, I do not make my investing decision solely on the price target from all the analysts, but observing the price target from analysts is a good way to gauge the market sentiment towards this stock. Let's put this guessing game, let's put the stock price guessing game aside and get into the fundamentals of Tesla. Let's start with the current Tesla market share in the United States. As you guys can see, the percentage of EV market share by brands in the US. Timeline span from Q1 2022 to Q4 2024. Tesla is still the leader, but is dwindling in its market share. So since Q1 2022 of around 75% market share has started reducing to 44.4% in the last quarter, whereas GM grew from 0.3 to 12.6 over the last 2 years. Hyundai go from 8.9 to 11.4, go from 4.4 to 8.7. So as you guys can see, the top 3 competitors are quickly catching up on Tesla's market share, and Tesla is losing 25% of its market share in the United States. You might ask, what about globally? In terms of the market share in the global EV market, you guys will see that BYD, which is a Chinese EV company that Warren Buffett, the great investor, invests in since about 5 years ago, has a market share of 22.2% globally. And next up, it's Tesla at 10.3%, almost in half. Let's do a high-level breakdown of Tesla before we go into deeper financial analysis. Tesla's business account for almost all of its revenue, but less than a quarter of its stock market value. And the bulk of its worth rests on the hope of autonomous vehicle Tesla hasn't yet delivered. Despite Musk's promise in every year since 2016 that driverless Tesla would arrive no later than the following year. So it's been 9 years. Now let's look at some hard financial data. On a high level, revenue of Tesla from 2008 to 2023 has grew from 0.12 billion to as high as 140 billion. That's a top line revenue. Now you guys might be asking, Cody, it doesn't really matter. A lot of these companies make a lot of money, but don't take any profit home. So let's take a look at the earnings as well. So Tesla has been in a negative or break even before 2018. And 2018 is the first year to start flipping to positive, right? To go as high as 20 billion in net earning in 2021, and then slowly go down to about 13 billion in 2023. So if the revenue is going up, but the net earnings going down, you might be asking, what about the cash reserve on hand for a company to continue to expand or weather the economical downturn? So you can see that the cash on hand for Tesla grew from 0.18 billion to as high as 36 billion in the last year. So what this means is that if the company do not make any money for the next 3 years, God, I hope it doesn't happen, but then the company will be able to sustain it, maybe partially, without any expansion, right? Assuming everything else is the same. Another factor that the great investor Warren Buffett look at a lot of time is the return on equity. Buffett is looking for companies that has a return on equity year over year consistently for at least 10 years or more, because this indicates that the company has a competitive advantage to hold on its financial economical moat. As you guys can see on the return on equity on Tesla, since 2014 for the last 11 years, since 2014 to 2019 has always been negative. Now, starting 2020 to 2024 has finally become positive, but there's only been 5 years of a consistent positive, and there's only 3 years that's over 15%. So this stock is not very consistent, and that's why Berkshire Hathaway haven't invested in Tesla. Now let's look at Tesla's future proposal and see what's exciting. The new Model Y will be coming off a 7-seater, which traditionally is only available in the Model X. My family has a Model Y and it's a great car. Also, Tesla is introducing the Tesla Model Q. It's kind of like a Model 2, so it's like a smaller version of Model 3 with a more competitive price. Tesla Roadster has always been a car I want to get, but this is not the car that's going to push the stock price up or make a lot of net earning. And what's exciting is the Tesla robot taxi that's supposed to be available in 2026. Coupe, take 2%, totally driverless experience. If you think the Tesla robot taxi is too small, a Tesla robo van that will be available in 2018 supposedly can take up to 20 people. And this will be big enough to carry the entire Elon Musk family. Another Tesla development that's catching a lot of highlight is the Tesla Optimus. This is as close as you can get to a human robot that will do a lot of tasks that humans do not want to do. Of course, there's other development in chips, AI system, neural networks to help with autonomous driving. All that exciting thing is great, but what about the second biggest country they're trying to expand to, which is China? This graph is showing the automotive share of Chinese EV market. So you can see that BYD is having a market share of 29.2% in China, and Tesla is only in the 7th of holding a 3.8% of market share in China. Now, if you remember this chart I showed you about the global EV market share where BYD is at 22.2%, Tesla is at 10.3%. BYD is a Chinese EV company that the great investor Warren Buffett invested in since 5 years ago that provide a very cost-effective EV solution. Now, go on the same train of thoughts. Okay, BYD is a lot more cost-effective, provide the equal or better quality than Tesla. China's population is quadruple of USD. So do you think people will buy more of BYD in China or buy more Tesla in China? You guys are all smart investors. And also there's a few challenges I want to point out about Tesla's expansion in China. Chinese EV company has traditionally been backed by the Chinese government. So do you think that Tesla's autonomous driving, which is driven heavily based on data, that the Chinese government will give up the data to give Tesla the advantage on its local EV companies? Think again about how Google left China. And also, like I mentioned early on, if there's so many Chinese EV competitors that can provide the same quality but cheaper products than Tesla, do you think Chinese people will buy Tesla or buy their local competitors? And some of you smart cookie might heard about the SWOT analysis, which we look at strength, weaknesses, opportunity, and threats for a company to analyze the pros and cons of investing in this company. In terms of strength, I want to point out the strong brand value and the superb marketing strategy. This all attribute to the founder Elon Musk. Without Elon Musk, there's no Tesla, Without Elon Musk, no one knows about Tesla or will buy any Tesla, unfortunately. In terms of the weakness, it's also its CEO, Elon Musk. The entire company is relying on him for engineering and marketing initiative. In terms of threats, whether the legality of the self-driving vehicle in China or in US, other states, or just increased competition from other top competitors that are chipping away Tesla's global dominating market share. If you're getting value from today's USA update, I would like to ask you for a big favor. I'll ask you to click the like button and subscribe to this channel. And before I go into my personal position on Tesla, if you're getting value from today's USA update, I would like to ask you for a big favor. I'll ask you to click the like button and subscribe to this channel. It's only 2 clicks, but it's a tremendous help to the channel. So if you think this channel is worth the 2 clicks, please do so. I'll really appreciate it. I've been watching Tesla stock closely since the COVID timing. I did not invest in it because I didn't know how Tesla will be doing. So I missed that train. So went as high as $300, pulled back, went as high as $400, I still didn't invest. And my money was tied up in January 2023, right? So I was waiting for the moment to invest. After Trump was elected and his close relationship with Elon Musk, I wanted to invest in it. But the Tesla stock was too high. Now that I pulled back, I finally see a small window to invest. Now, with all the volatility, with all the wild card of both Trump and Elon Musk, I do not want to put more than 3% of a personal net worth in this company. So my plan was that I will buy 1% right now. Actually, I already did it. If the stock price dropped to $200, I'll buy another 1%. If it dropped to $150, I'll buy another 1%. If it never happened, that's totally fine. And here's my reasons why. I really think Elon Musk, besides all his crazy and wild movement and statement, he's truly someone trying to bring a better world to the humanity. So I want to personally support him with my money, put my money where my mouth is. But I do not want to put too much just in case if Tesla go down, my entire net worth will be wiped out. And to answer the question of the title of this video, whether Tesla is going to be affected by the boycott in the long run, the answer is no. This is not the first time this has happened, and people are very forgetful these days. As long as Elon continues to deliver what he promised, Tesla will be fine in the long term. That's it for me, but hey, I want to know your thoughts. Are you buying Tesla or are you against Tesla? Let me know in the comment section below. And like I mentioned earlier, if today's video is worth the 2 clicks, please do so. I really appreciate it, and I'll see you in 2 days.